I bet. All right, everybody. Uh, call this the blueprint. It's pretty much how I trade on a day-to-day, week-to-week basis. I'm pretty much gonna do a quick little breakdown for you guys, so it could give you a little bit of insight on how to attack the market. Go and go to the next slide, bro. So starting off at the beginning, this is my risk reward. Starting off with each trade that I take, I put my stop loss at 30 points. Oh shit. Put my stop loss at 30 points. Pretty much I do that for my security. And it's pretty much a safety mechanism that I use for myself. Pretty much how attacking the market in a robotic standpoint is always better than using your emotions. You always want to put your emotions away as much as possible when trading. So that's why I attack the market with a 30 pip stop loss. And my take profit is always the last week high or low, or the Fib TP1, or if I'm just going for a day trade, it would be the day high or the day low, depending on the trend. So it's an uptrend going for the high, it's a downtrend going for the low. Now, as far as entering, I only enter one entry at a time because you don't want to risk too much when entering because then you can over margin and blow your account. So if you blow your account, that would obviously be a huge issue, and you pretty much be out for the day or out for the week easily. So always go one entry at a time. That's the best thing to do. Now, I always like to do 2 attempts per day. Usually one attempt should do it for me. So if I end up losing that one trade, then I got the second one. Like I said, it's for a risk reward reason, no saving money. And after a win, I stop trading because you don't want to fall into greed, because you'll think you're on a winning streak and then you'll do something right, and then you'll mess around and do something wrong, and then you'll lose the money that you just worked all hard for to do. You know what I'm saying? So give 1 second, y'all. Shut up. Okay. Yeah, I'm on the phone. Okay. Sorry, y'all. Okay. I'm over here multitasking. Okay. I'm busy, y'all. I'm busy, y'all. I'm busy. Okay, cool. I'm busy. Thank you. I'm busy. Thank you. All right. All right. So anyway, like I was saying, now my trading time is between 10 a.m. and 2 p.m. because that's for the New York session. I trade the NASDAQ mostly, but GBP also runs at this time too. I know that it runs in the London session mostly, but as far as for the NASDAQ, I like to trade between 10 a.m. and 2 p.m. That's when the candles are more volatile around that time. Now, as far as how I trade, this is pretty much the setups I look for. The setup that I'm looking for is when that reverses at a zone from a trend being an uptrend or a trend being a downtrend. Pretty much looking at the diagram are examples, some for buys, some for sells. Now, once price retraces and creates liquidity, then snatches it, and then rejects the zone, that's when I look to enter trade into the opposite direction. And around, like I said, between 10 and 2 p.m., that's when that trade is usually happening. Now, as we look at the diagram for the bottom for the sells, you can see that the zones are the order blocks and the fair value gaps. And as you see where the orange lines are located, that's pretty much where the liquidity is located, and that's when it's being snatched. Once it's snatched, that's where we're entering, and that's when we're going to the opposite direction, as you can see with the arrows. Same as the diagram for the sells, vice versa. It's doing the same direction. Liquidity is right there at the corner. As soon as we snatch at the top, enter at the order block, it's going down the other direction. All right, we'll go ahead to the next slide. All right, now this is just a personal note. Now, price will continuously flow in one direction until it's stopped by a zone or a previous high or low. Now, if looking for the trend to reverse, price must first create a break of structure in that direction. And if price never breaks structure, then continue the current direction. So as you can see with the arrows, price is continuing in one direction. So there's no reason to want to look for a buy in a selling market or a sell in a buying market. You see what I'm saying? Pretty much also as when David shows on the black chart, that's pretty much another way to pretty much get a better continuous view of how the market should be flowing. So that's why he pretty much said it's best to go on the black chart so you can have that view in your mindset. But pretty much the same situation shown with the arrows. All right, go to the next slide. Okay. Now this is my entry equation, pretty much that I broke down last time. Now, just going to go in a little bit more detail into it. Go into the next slide, bro. You got the next slide, David? Okay, there we go. All right, so this, damn, bro, bring it back. Okay, there we go. Cool. All right, so this is the breakdown for my entry equation. Like I said, I look for a trend in zone. So looking for the trend for the day or looking for the trend for a week, whether we're in a bullish market or a bearish market, we're trying to identify that trend. So as we saw in the diagram, we were in a buy. So that would be the uptrend that we're identifying. In the zone that we're looking for is obviously either the fair value gap or the order block. Now, if there's no trend in zone, then there's no trade. And if one thing that I also said, we're in a range, then there's also no trade. Then we must be in a bullish or a bearish market for there to be a trade. And each zone should form from the current trend to the far left. So always look to the far left for these zones to form. Now, second, after price retraces, look for a low buying or a high selling formed from the trend that's closest to the zone. This will be the liquidity that's going to be snatched, as we saw previously in the diagrams. And the third, identify the housing candle. As we saw in the entry models, the housing candle is what snatches the liquidity right before the entry. This candle will go past and snatch the liquidity that was formed. And as soon as the housing candle snatches that liquidity and rejects the zone, enter the trade. Now, please note that a trade for the day will use a zone from the previous day, and a trade for the week will use a zone from the previous week. As you can see from the diagrams below, David, I don't know if you could zoom into them a little bit.
Nah, I can't zoom in. They don't let me.
Nah. It's cool. It's all good.
But you're doing a good job, man.
Nah, it's great. For sure. But as you can see on the other diagrams below, on the first one to the left, down there it says previous weekly zone. You can see that zone pulling all the way from last week. The period separator showing the separation into the current week, which would be to the right, and that's where the entry is. So that's what we'd be looking for on a weekly entry. And the same thing to the diagram to the right. That'd be the zones from the previous day would be used for the trades for the current day. So every time we're looking for a trade for the current day, we'd be looking to the far left from yesterday going into the current day. See what I'm saying? All right, you can go to the next slide, bro. Okay. we're almost done. These are my do's and don'ts. Now, don't wait for price to flow. When waiting for a trade to happen, it should happen fast. If price is struggling to move in that direction, then you're most likely in the wrong spot, and it's most likely not going in that direction at the moment. As we can see in the negative in the red square, yes, price did retrace at the order block, but as we can see that it's struggling. Like when we enter, we need price to move. If it's not moving, then it's not going in that direction. As we can see in the green square, it shot straight up after it took the liquidity from the left, shot straight up at the perfect timing. And go to the last slide, bro. Okay. Now, for this one, don't trade equal highs and lows. I know in the beginning times of teaching of Forex, we're taught to trade the equal highs and equal lows because that would be the high probability setups. But those are what everybody is taught. So that's where all the liquidity is going to be hiding. So obviously that's where it's going to be snatched. That's what the market's going to snatch. That's why a lot of traders end up losing a lot of trades and they wonder why they're not profiting, or they're wondering why they're going for a correct opportunity, but they're getting taken out, and then it's going in that direction anyway. So, with that being said, never expect a positive movement from equal highs and equal lows. Those areas will always be swept no matter what, and only enter when price sweeps the liquidity with the sporadic move, and then trade the other direction.
Man,
And yeah, with that
appreciate
being
that,
said, guys,
man.
that's
Yeah,
how I trade.
the questions everybody have is going to have to wait until that's going to be the next video. I'm going to give everybody time to grasp this, watch this, and I'm going to jump into my part now. Man, clap it up for you, bro, my boy. You did a great job breaking that
Yes, sir.
down.
Yes, sir. Yes, sir.
But
Yes,
I'm
sir.
gonna keep the
Appreciate it, man.
I'm gonna
Appreciate it.
I'm gonna keep the ball rolling.
Do your
I'm gonna keep the ball.
thing, man. Do your thing. Go on mute.
All right, bet. My computer been freezing up, so I've been. Uh, all right. So this is pretty much my trading plan. It's pretty much the same thing you just seen him go over. I'm gonna keep it very simple and short and sweet. We're gonna go over the psychology and the rules. I'm gonna give you guys my settings. I'm gonna give you guys the main things that I look for before I execute into a trade. And I'm gonna show you a typical buy setup and a typical sell setup. That's all you need to take a trade. Step one, I need you guys to follow the fucking rules. Okay? If you don't follow the rules, you will not have the outcome that you want. So I'm gonna let that sink in for a second. You need to understand that you are the liquidity. We are the liquidity. In my teaching, I'm gonna break down more of that, which I do. But now getting into what I look at, I need to see demand if I'm looking for a buy setup, and I need to see supply if I'm looking for a sell setup. Grab liquidity. All of these things are called confluence. I want to see a break of structure to the downside if I'm looking for a sell, or the upside if I'm looking for a buy. These are things that I need to see. No, I don't just want to buy at support. I want to buy under the support where the wicks is. Okay? I don't want to be where everybody is because the market makers can see that. You have to understand that when you're getting into the market, that you have to get in where other people are losing. So I'm gonna let that sink in again. You have to put your entries where their stop losses would be. That's where you have to enter, and that's when you will become profitable. Buy under support, sell above resistance. All entries need to be discounted. How do we know if our prices are discounted or not? We're going to draw our PDR array and see if our price is in a premium or a discount. If we're looking for buys, we want our price to be in a discount. If we're looking for sales, we want price to be in a premium. Remember, the first thing you need to do, hold on 1 second. Anyway, like I just said previously, all entries need to be discounted with PDR arrays. Remember, first you need to identify the setup. Most traders, what they do is they just think, oh, it's going up, let me get in the market. Oh, it's going down, let me short it. No, we're not gambling here. That's not what we're doing. We're doing the same thing every single time. We cannot place a trade unless the things that we're looking for happen, okay? So first, we need to identify the setup. We need to abide by the trading plan as if it is the law. You need to follow your rules. If you don't follow your rules or you break the law in society today, what happens? You go to jail. So every time you break your rules, you need to find a way to discipline yourself. I don't care if it's taking cold baths or whatever it is you don't like doing, start doing it. So you stop making the mistakes that you are making. Take a look at the trades and understand why you winning those trades. Why are you losing those trades? And that's how you get an edge on your strategy. The pairs that I personally trade, I trade one indice, which is NASDAQ 100. The Forex pair that I trade is my favorite thing right now, GBP USD. The times that I trade, 2:30 a.m., the London Open. I mark my charts by 2:30 to 3. I want to be entering into the market. My risk management, a 1 to 3. I don't need to take more than 6 trades a week. My fib settings. These are my fib settings. What everybody wants to know. You see if I could brighten this up. All right. My stop. Let me start off with my entry. If I'm buying, I'm pulling price from the low to the highest point, and I'm waiting for price to get to these levels and react to these levels. If I'm buying, this is where I want to enter. This is my stop loss. Always, never changes. This is my main TP. So this is the reward from here to here, and this is the risk. This is a 1-to-1, about a 1-to-1 ratio. This is a 1-to-2 ratio. This is a scalp. This is a scalp. This is the real trade right here. Vice versa. If we're looking for a sell entry, we notice that the 79 isn't low, it's high. The hundreds right here, this is the stop loss level. TP1 for the scalp, TP2 for a quick scalp, the real trade right here. real TP level, real TP level. These are my settings. My buy setup now. The buy setups that I typically take, before anything, I'm looking at a naked chart. Notice I'm looking at it on my 15-minute. What do I see? A low. What do I see? This low get swept. So where's the safe place for me to enter? At this low. So where do I want to enter? Where I put this black line. This is what I'm looking at with nothing on the chart on the 15-minute time frame. The first thing that I'm looking at is my black level, which is the liquidity that gets swept. This is going to be my entry, which is the 79. My stop loss is going to be here underneath these lows where price never came to. This is the first TP as I just showed you guys. This is the second TP. The real TP is up here. But as you can see, the trade had little to none drawdown. The other part of the confluence is the demand zone. The main thing for me is supply and demand. But this is more confluence. I have a demand zone here. Price swept liquidity. This is my black line. So I know that price is changing the state of delivery here. And I have my entry with my fib. So these are 3 confluences. For the self setup, it's the same concept. Liquidity got swept here. So where do I want to enter? Same level where the green line is. I also, that's what I'm looking at before any indicator, before anything. Whatever you guys use is your preference. Me, this is what I'm looking at on the naked chart. The key things I'm looking for is higher highs or is the market creating lower lows? The market was creating highs, created an equal high, and then it didn't go past the high again. Price stopped closing above my level. More confluence. This is the same exact trade. Naked. Now I add another confluence, which is my supply zone. The liquidity was swept, which is a change of state in delivery, which is 2 confluences. Last one was with the fibs, but I don't think I added it because I rushed. But I'm gonna put this together in a file so that it can be reviewed and read. The questions, I save them. Watch this video. I'm gonna give everybody 24 hours to watch this video and give me your questions on it on part 2, which will also be on YouTube. Thank you again. Peace. Have a blessed day.